Myself to the stage. Just still getting used to this StreamYard software. But welcome. We're going to go ahead and wrap up some of the most important charts of the day. And there have been some really, really big moves today. So I'm going to go ahead and begin by sharing. I want to share TradingView. So that's where we're going to get started here today, is over in TradingView. And really, we have to start by taking a look at the Japanese bond market. Oh my goodness, look at this move. So that is I think this was a 27 basis point move out of the long end of the Japanese yield curve today. This is what's referred to as blowing out. So let's start by zooming out here. Let's zoom out to a weekly. And from the weekly, what does this chart remind you of? Doesn't this look kind of like the precious metals? And when you throw gold or silver on top of Japanese 30-year yields like this, they track pretty closely. So this level of bond market volatility, this is something that is going to have an impact on equities markets and likely also on digital asset markets. So now that we know that the Japanese 30-year has blown out to the upside, what type of impact will this have on the yen? That's the thing to ask. So if we take a look at USD JPY, this is one of my favorite patterns out there, one of my favorite patterns on the board right now, because if I just zoom out to a monthly here, and now that I'm on the monthly time frame, what I want to look for is this double top, this level of resistance right here. So from back in 1990, 162 was a level of resistance. And look at where the yen touched, look at where it tested earlier this past year. This was this was 2024. This was 2024, all the way back in July of 2024. We got back up to 162 on the yen. And what's happening now? If I zoom in a little bit here, this move back up towards 162 looks as though it could push above 162. If it does, then I think the yen probably rallies all the way up to 200. So that would be a 23% move to the upside. Now, if the yen rallies up to 200, how do you play it? How do you play it from your DeFi wallet? Well, there's a couple of different ways you can do that. You could trade on Ostium, just simply getting long the dollar, short the yen. Or something that might be a little bit more interesting is to trade the yen on Avantis. Avantis is a perp stacks native to the Base chain. If you go to Avantis, you could get long the dollar, short the yen, and then if you don't want exposure to the dollar, because, hey, let's face it, the dollar is sitting at support, and this is a pretty big bear flag. You see this flag pattern here? Bear flag at support. If support breaks on the dollar, then this is heading down to maybe 90 or so for DXY. So if you don't want that long exposure to the dollar, but you still want to be short the yen, you can hedge out that long dollar exposure using the Swiss franc, CHF, which is typically a safe haven currency. So if you are long the dollar, short the yen, and then you are long the franc, short the dollar, and you do that notionally 1-for-1, you can hedge away your US dollar exposure, be long the franc, short the yen. So that's the trade that I'm looking at. I really just need to be patient and wait for the yen to get up above resistance. That's going to be my entry. We get up to 163 and I'll be long dollar, short yen. So that's one leg of the trade. And then the other leg of the trade is short dollar, long franc. And so together, that way I hedge away my dollar exposure. I'm long the franc, short the yen, exactly what I'm looking for. It's just a matter of being patient enough to wait for that entry. Okay, so We took a look at Japanese 30-year yields because, hey, this has been a historic day and really a historic move. And the thing that's so interesting about the Japanese bond market and really the Japanese fiscal situation writ large is that it seems very, very, very similar to what's going on in the United States right now. This fiscal dominance, rates moving higher, deficits expanding, currency weakening, all of these things all at once, those are symptoms of fiscal dominance, where the central bank is essentially just financing the government to keep the government operational. And it doesn't have to be that way. If there were enough political will to cut spending and reduce the size of this deficit spending, then you could start to return to some type of normalcy. But it doesn't look like that political will exists, neither in Japan nor over here in the United States. So now that we've taken a look at the yen, let's take a look here maybe at Bitcoin. I think that will be a good place to move to. Let me zoom into a daily and let's bring this into frame here. Now, remember yesterday, we were talking about this level of support. And now that Bitcoin has broken this level of support, where is an entry for a potential trade? Well, let's zoom in just a little bit further to a 4-hour. And on the 4-hour, I think it makes sense if you believe that the S&P, the NASDAQ equities might have another leg down. Like this could be the start of a correction. So if you believe that, then you might want to also think about getting short Bitcoin if it is able to test this level of what is now resistance. So you see this level of resistance here? It was support. And so it looks like you're not seeing the charts on the live call. Okay, why is that? Let me go ahead and add that to the stage. Oh man, okay. So this is my fault. I am still getting used to using the StreamYard software. And now that I know exactly how to add these charts here, I'm not going to make that mistake again. Thanks so much. I wasn't able to see the chat here. So DeFi Don, thanks for sending me that text, man. I appreciate that. So why don't we just go ahead and hop back in? So I think I should probably start over and just run through that real quick. So if we're taking a look at Japanese yields, this move out of Japanese yields, I think it's probably going to force the Bank of Japan's hand, where as we were looking at the research in the school community, the DeFi University community earlier today, that research stated that the Bank of Japan has a trilemma. There's a trilemma problem. They can either save the bond market and save the currency, or they can save the bond market and save regional banks, or they can save the regional banks and save the currency, but they can't save all three at once. They can't save the bond market and the banks and the currency. So which ones do they prioritize? Well, I think it's probably going to be the businesses. I think that they prioritize the businesses, the banks, because if those banks fail, then it's kind of game over. I think that they prioritize the businesses over the currency or the bonds. So they'll probably end up allowing the yen to inflate. And that's why I'm so interested in trading USD JPY. So if we just bring up USD JPY one more time here, and let's zoom out to a monthly once more. And notice from back in 1990, this 162 level offered resistance. Now, if we go ahead and zoom in here to the recent price action, this is from back in the middle of 2024, early 2024, look at where we found resistance again, right at 162. And so now, what is the yen doing? It is pushing back up towards that 162 level. If this level breaks to the upside, that will be my trigger to enter a short yen position, where I expect the yen to continue to depreciate. And I think it probably moves up to 200. I think that's what it looks like to me. So how do I play it? I would head on over to Avantis. Avantis is a perpstex native to the base chain, and I don't know that I would want to be long the dollar and short the yen. Because if we take a look at DXY right here, this is the US dollar index. And if I just go ahead and remove these drawn objects here real quick, this pattern on the Dixie is referred to, the US dollar index, DXY. This is a pretty well-defined bear flag pattern. And bear flags are short-term or medium-term continuation patterns. So if this pattern completes, we should expect another leg down out of the dollar. Now, if the dollar breaks down and I'm long the dollar and short the yen, the dollar breaking down could negate all of my profits being short the yen. So I want to hedge away my US dollar exposure in that trade. Here's how you do it. On Avantis, you are long USD, short JPY in leg one of the trade. And then notionally, what you would do is use USD CHF. That's the US dollar and the Swiss franc. Now, the reason why you choose the Swiss franc is because it's traditionally been a safe haven currency. They are very, they are not profligate spenders in Switzerland. They are fiscally responsible, okay? So that's why the currency is treated as a safe haven. Now, if I'm long USD, short JPY in leg one, and then I take that USD CHF pair and I get short USD, that means that I would be long CHF. If I do that notionally 1-for-1, then I can hedge away my US dollar risk. And instead of being long the dollar, short the yen, I would be long the franc, short the yen. And we can actually take a look at what that chart looks like. It would be something like maybe JPY CHF. There we go, JPY CHF. And so this is exactly what I want to trade. In fact, I don't know that I would necessarily even need to wait for an entry here. Like, this looks like it's about to just fall off a cliff, JPY CHF. So this is short the yen, long the franc. That's this pair. This looks pretty attractive to me. Now, let's go ahead and draw some support and resistance on this chart. So if we do this, that is definitely a level of resistance up above. And I want to go ahead and throw, this is a monthly, I want to throw a moving average down on this. And so I think I'll start with maybe a 200-week moving average. And, the pair is trading well below the 200-week moving average. So let's see if we can define support. We've got resistance above at the 200-week. We've got trend line resistance even further above. So let's throw down some support here. I think I'm going to use this as my anchor point, and I'm going to connect it to this next lower high here, lower low. This is a lower low. So instead of actually drawing in a separate trend line, what I'm going to do instead is I'm going to clone this trend line. And then I'm just going to drag it down because it looks like there might be a channel. So yeah, you see that? It looks like there's a bit of a channel that has formed here for JPY CHF. And so this channel, it looks as though the pair is smack dab in the middle of the channel. Now, this could be a little bit misleading for some people because this is, several decades of data. So maybe what we want to do is zoom in even further from a weekly to a daily. And now that we're looking at this on a daily, sometimes when no clear levels of support or resistance jump out, it can be useful to use a Fibonacci tool to see if there are any Fibonacci levels of support or resistance. So why don't we do that? Let's zoom out once more to a weekly, get all that data, and then I want to grab a Fibonacci retracement. And let's just see if we can find some interesting level of support. So I'm going to go ahead and use this high from back in 2000. and that's going to be my anchor. I'm going to go ahead and bring it all the way down to the current spot price of this pair right there. And, this would be, on a push back to the upside, we would have some interesting levels here. But I don't really see much that is useful. Fibonacci's can be useful sometimes, but not all the time. So if we just take a look at this channel here, let's see what we see with a different moving average. So there's the 50-week moving average, and there's the 100-week moving average. Okay, so the pair is trading well below all three of the big important moving averages. That's bearish. That's very bearish. Now, if the pair were to move down to support, man, how far would that be? What would we be talking about in percentage terms? It's like a 45% move. So let's just take a look and see, is that likely? If we're looking over here at USD JPY, if JPY moves to 200, that would be a 23% move in US dollar terms. If at the same time the dollar loses value and moves down to 90, we can go ahead and measure that. That's an additional 9% on the downside. So what would that mean for the franc? Now, let's take a look over here at JPY CHF one more time. So if we know that the dollar could lose 9% down to 90, and the yen could lose 23% up to 200, all of a sudden, this 45% move in the pair, where you're short the yen and long the franc, this move in the pair starts to look, actually reasonable. It's a 45% move. Now, over what period of time? Well, it could probably happen more quickly than you might think. But I would use stops on this. I would definitely, use some tight stops trading this over on Avantis. It's an interesting setup. I quite like that. Let's go ahead and switch gears here. Let's take a look at gold and silver, because, hey, in the futures market, the after hours futures market, gold is just ripping higher. And since gold has been positively correlated with long-term rates over the last couple of years, since gold is pushing higher, it makes me think that rates are probably going to continue pushing higher also. So if rates keep pushing higher, we should expect that this measure of bond market volatility will also keep pushing higher. So let's check in on the MOVE index. So the MOVE index is important because not only is it a measure of bond market volatility, which has been collapsing since those April tariff tantrum highs, but it's also quite inversely correlated with the S&P 500. So if I invert this scale like so, and then I snap it to the screen so that we can see this a little bit more clearly, and then I go ahead and throw on top of it the S&P, and with a new price scale, look at how tightly inverse this correlation has been. So as bond market vol has picked up, the S&P has sold off. Now, another thing that we should take a look at here is just a measure of S&P 500 volatility, the VIX. And so with the VIX just pushing up above 20, 20 is an important level for the VIX. You get above 20, and I start to think anyway that you probably have not put in the lows in the S&P, not quite yet. So it looks as though we could have another couple days or maybe even another few weeks to the downside to allow volatility to put in a top. So where could we see some resistance out of vol? We could see it right around 30, 29 or so, 28, 29, 30, something like that. But remember, volatility is mean reverting. So we should expect that if vol gets up to 28, that might mark the low for the S&P. So that could be an interesting buying opportunity. If you see the VIX push up to 28 or 29, it could mark a bottom in the S&P which might be a buying opportunity. Remember, this is just speculation here, speculating using technical analysis. I don't have a crystal ball. I wish I did. But let's take a look here at the S&P Cash Index. Now, this pattern we were pointing out just yesterday. This is a really interesting pattern. This is referred to as a gap. This is a big gap here on the open. Gap and go. So gap down and push lower. This is a daily chart. If we have another day on the downside tomorrow, I would expect this level here on the Cash Index, 6730, to hold as some type of immediate term support. However, let me just go ahead and draw in that horizontal right there. Let's remove that brush. And hey, if we get another leg down tomorrow, so continuation of the move today, which if yields keep blowing out, seems like it could be likely. If we get another leg down tomorrow, then this 6722 level would need to hold. If it breaks, then you can start talking about a move down here to something like 6520. If we measure that move from the current price, that's only a 4% move to the downside. That's like a garden variety dip in the S&P. And it could very well be buyable, especially if bond market vol starts to taper off and cooler heads prevail in Japan and globally. So it looks like we probably got another couple days or maybe even another week or two of downside out of the S&P. If we do, then I would be watching the VIX like a hawk for signs of a top, which could mark the bottom in the S&P. So we've taken a look at the S&P, we took a look at the VIX, we took a look at Japanese 30-year yields. We've had a chance to take a look at Bitcoin. In fact, why don't I hop back in here to Bitcoin? So this is one of the interesting trades that we've been watching in DeFi University for the last several months. Quite a bit longer than that, but just trading it the last several months. And if we take a look here, this pattern, notice this important level of support. And what happens to a level of support when it breaks? It becomes resistance. So if I zoom in from a daily to a 4-hour, let's just take a look at this. See this big break of support? Now, if you think that the S&P and the NASDAQ are likely to have another leg down, or at least continue to move lower until bond market volatility tapers off. If you think that's likely, then it might be an interesting trade to open a short on Bitcoin at resistance. So resistance comes in on BTC right around 89.5 or so, 89,400. So this is the Binance data, but right around 89,400 could be an interesting short entry. And I got to say, over here on Ethereum, it certainly looks as though we've got a very similar setup in the making. So this is actually something that I was trading last night. My take profit was hit right here at support. And now that ETH has broken below support, I'm starting to think that if we get another test, if we get a test of what is now resistance. So ETH moves, what is that? Only about 30 points to the upside from where it's trading now, something like 29.95, maybe just a touch below 3,000. If ETH pushes back up towards 3,000, that could mark a very interesting short setup there. Now, if you're going to trade ETH and you want to use this as your entry, well, where do you set your stop? And where do you set your take profit levels? So I would, number one, set my stop tight. So it would be something like, maybe 20 or 30 points above my entry, maybe like 1 percentage point above my entry. That I would probably trade this where I'm either right or I'm right out. I wouldn't want to sit in a losing position if ETH starts to bounce back up above this level of resistance. So I would set my stop very, very tight. But on the downside, I would start to take profits here, right around 27.80. I would take profits again here at 27.20. Actually, you know what? I would probably just take profits at 27.80 and 26.30. Those would be the two levels where I would start taking chips off the table, and I would roll my stop down if ETH starts to accelerate to the downside, just to lock in those profits. So this looks like an interesting setup to me. A trade on the short side down to 26.40. That looks pretty good. That looks pretty good. And if we zoom out here, not just on ETH, but we can also take a look at BTC in a moment too. If we zoom out to a weekly, and then I just want to bring this into frame, this pattern, this looks like a big bear flag pattern. So we've got the pole here, and we've got the upsloping flag. Here is support, which just broke today. Looks as though it's most likely that we see ETH move back down to $2,600. And we see a very similar pattern playing out here on Bitcoin. Here's the pole, here's the flag, here's the break of support. The next level of support, really like better support, comes in at like 80 or 81. But if that doesn't hold, then the best level of support would be right around 75K, 74K for BTC. And that seems to make sense to test this level, because if my thesis is correct and Bitcoin has actually entered a bear market, well, then a 36% correction from peak to trough so far in a bear market would mark the shallowest bear market correction in Bitcoin's history. So I think it is likely that we see more downside out of Bitcoin. And if you're willing to be very, very patient and wait for a great entry, you might just wait for the 200-week moving average to be tested, which as of right now comes in on BTC at 57.8. But if BTC moves down towards the 200-week moving average, the moving average will move up to meet it. So you might be able to pick up BTC at around 60K at some point this year. That would be a pretty attractive entry. What about Ethereum? Where is its 200-week moving average? All the way down here around 2,500. Now, if Bitcoin moves down to its 200-week moving average, I think ETH would probably break below its respective 200-week moving average. The reason why I think that is if you take a look at ETH BTC, just the ratio of these two assets here, and you ask yourself this question: which is outperforming? Well, it's pretty clear that Ethereum has been underperforming Bitcoin for really, the entire bull cycle. This entire bull market into what I think is the start of the bear market, ETH has been underperforming Bitcoin. Now, I was waiting patiently for Ethereum to break out here in Bitcoin terms. It never did. It never did. And now that we know the Fed is restarting quantitative easing simply by buying short-dated treasuries, and it looks like they're buying them to the tune of $50 billion a month, you would think that that QE would mean number go up for all risk assets. But here's the problem: something called fiscal dominance, where the Fed is now stuck in the precarious position of simply funding the government by monetizing debt. The US government has a ton of debt. It's nearly $40 trillion, the debt pile is now. And so as the Fed prints to buy bonds, paradoxically, it's driving up interest rates. So if rates go up and the US dollar inflates away, then that tool that the Fed has of printing dollars to buy treasuries, that quantitative easing tool, it actually has the effect of throwing fuel on the fire. And it may not actually make asset prices inflate. It could, unfortunately, blow up the bond market. So I don't think that's likely. I think that cooler heads will prevail. But if QE this time around results in asset price inflation, then I would really expect ETH at some point this year to actually start to outperform Bitcoin. And even if both Ethereum and Bitcoin lose value against their US dollar pairs, if ETH is outperforming Bitcoin, then I would expect this chart to go up. I would expect ETH to lose less in US dollar terms on a percentage basis than Bitcoin does. But time will tell. We shall see. If ETH breaks down below this red level of support that I've marked, then hey, it probably goes back down and tests those lows from all the way back in April of 2025 in Bitcoin terms here. So thanks so much for joining the live call tonight. And what I'm going to do here is make absolutely 100% certain that the next time I run this call, I'll make sure that you guys can see my trading view screen right off the get-go. So thanks so much, you guys. I appreciate you all for showing up live like this. And I will see you guys all tomorrow. The next live stream that I'm going to run, the TA live stream that I'm going to run tomorrow, is going to be at 7 p.m. Eastern Time or 4 p.m. Pacific. So I'll see you guys then. Have a good rest of your evening. Thanks so much.